If you have 10, 15% drawdown and you can't sleep at night, every once in a while, the market's going to punch you in the face. We're at 6 crore investors. Like, how do we get to 50 crores? Now, that was a challenge that was thrown to us by SEBI. People should not be thinking about global investing because like Taiwan and Korea have done amazingly well for the last year, and India hasn't.
Given that you've had so much global exposure as well, what does India have going for it?
What's facilitating a lot of that in India actually is the digital ecosystem. In India, with the account aggregator, with UPI, like I could not do this in the UK.
Where is it that we're lacking?
Mutual fund AUM here as a, let's call it a function of GDP. We're in the teens, 18, 19%. UK, where I came from, is at about 80%. The US is 150%.
There's, concerns about foreign institutional inflows.
From their lens, is that those asset allocators, they are relative value players, right? So it's not necessarily about panic.
If not running an AMC, what would you be doing?
Running an IPO team. If you want to have a trader mindset, that's great. Leave a little pocket to say, hey, if I have 100, I'm going to have 10 that I trade in and out, and the rest 90, I'm going to invest. And in that investment pocket, it needs to be disciplined.
What are the questions they really need to ask themselves when they are looking to invest long term?
I can use my own example.
BlackRock, the world's largest asset manager, and billionaire Mukesh Ambani's financial services unit joined forces to enter India's asset management business. And in just about a year, that joint venture has already amassed nearly 18,000 crores, or close to $2 billion across cash, debt, index, and active equity funds. The scale of this partnership is remarkable. BlackRock manages over $14 trillion in assets globally, while Jio is the brand behind one of India's biggest business success stories, serving nearly 500 million telecom subscribers. Two giants, each with a different kind of scale and expertise, shaping the future of investing in India. So today, leading this ambitious venture is Sid Swaminathan, a 20-year BlackRock veteran who has moved from London to spearhead Jio BlackRock's India strategy. He believes that India is one of the most exciting investment opportunities across emerging markets. And today we get his perspective on where the country is headed, what makes India stand out, how Jio BlackRock plans to balance active and passive investing, and what are some of the disruptions that he believes will stand India in good stead. We also talked to him about his personal finance relationship, what his advices to investors, and investing in mutual funds. So let's get started. Sid, thank you so much for being with us, firstly, and it's good to have you on board.
Great. Thank you for having me. Happy to be here.
So let's get straight to it. And I want to talk about the joint venture, the fact that we have Jio and BlackRock coming together, given that there's deep consumer reach that's associated with Jio. And when it comes to BlackRock, it's a global financial powerhouse. Can you tell me a little bit more about the synergies and what the thinking is getting these two giants together?
Yeah, absolutely. And, if it's okay, I can narrate it from a personal lens as well, right? So I was born in India, grew up in India, but spent majority of my life, studying and working abroad. But I still have family here, so I always came back and could see the growth. And every time I came back, it was only for holidays at the time, but you could see kind of the growth in the markets, investor participation increasing. So I was always intrigued about, oh wow, how could I play a bit more of a role in this? And then the joint venture got announced, which is just about 3 years ago now, and I vividly remember this, right? Because it was my dad's 70th birthday.
Okay.
So everyone was back in the UK. We had actually hired this place in Wales, and all the family was together. And one of my uncles had his phone out and said, hey, BlackRock's just announced this joint venture with Jio. Did you know anything about it? And I said, actually, no, I didn't. And they're like, you should do something about that. I said, well, maybe I will. And now here I am.
Oh, wow. Double celebration.
Exactly. But at that point, it was just, how can I help was my initial thinking to say, this is super exciting. To your point on these two very, very, in my view, complementary kind of organizations coming together in India, BlackRock with the global investment expertise, having managed, large sums of money in many different markets, to then come to India and partner with Jio that really understands, the retail investor and the consumer, right? And that's where majority of the growth is also going to come from in the market here. So that was very interesting for me. So I, volunteered initially to just help out with some project work. And then 6 months later, I was on a flight to Mumbai, and I've now been here for 2.5 years.
Absolutely. I like that you brought up the fact that the BlackRock global investment thinking and the kind of reach that you have with Jio that has been amalgamated, and that's the kind of work you're doing. But which brings me to the question that, it is a space that is already deeply entrenched with decade-old players. So what is the differentiating factor? Is it pricing? Is it distribution? Is it technology? Is it a combination of all of them?
Yeah, it's a combination. I would also add a few other things. Even from an investments perspective, I think differentiation is key. Because you're right. There are 55, I think, is the latest count, asset managers that are operating now. It was actually 47 when we launched. So there's been another 8 that have come since we launched. And that's a good thing, right? And that's a sign that there is high conviction that the market is going to grow. So we are not alone. Obviously, we are very, very strong believers of it, but we're not alone in this belief. So despite all of the growth that we have seen in the last 5, 6, 7 years in terms of the number of investors that have come to the markets, the AUM that has grown in mutual funds, it's still at a low base relative to other parts of the world.
Correct.
So if you think about mutual fund AUM here as let's call it a function of GDP, we're in the teens, 18, 19%. UK, where I came from, is at about 80%. The US is 150%. So there's a long, long way to grow. So the fact that there is a growth from a number of players coming in, we see that as a positive sign. There's more space for everyone. Now, within the actual investment space, there is still room for innovation. Right? That's the other thing. So there's a very obviously strict categorization of funds. Which is, has been done by the regulator in the best interests of investors. But even within that, we see pockets of innovation. I'll give you an example, right? So FlexiCap, for example, is the largest category. It's a core holding for most kind of equity-based investors, which is the largest proportion here. Even within that category, the strategy that we've brought here to India is differentiated, and it's called the Systematic Active Equity franchise that has been around at BlackRock for over 40 years, leveraging data, AI-driven insights into fund management, right? So we brought that over. We've hired the team that works with a platform like that. And what you get to do with something like that is you bring in differentiated ideas. So you're not just looking like a traditional researcher or a fund manager at earnings statements or financial statements, press releases. You're actually doing a lot more. You can look at alternative data. We're looking at things like credit card swipes to see how banks are doing. We're looking at things like what traffic outside some pockets, whether it's a mall, how it looks like in terms of seeing how consumers are behaving. So all of that alternative data can be used in these kind of strategies. And they are actually very complementary. And that's the most important part. It's not one or the other.
What about individual sectors? Because I know that you look at a more macro picture versus individual sectors, but manufacturing, digitization is something that you have spoken about, and AI as well. Can you elaborate a little bit more about what's looking interesting?
Yeah. I generally tend to stay away from those questions because these themes change, and we have a sector rotation fund where we actually move pretty quickly in terms of the views. But to answer your question, yes, there are these, I would say, more macro themes that we do keep an eye on. I think manufacturing is a really vital component of how we see the overall India market could evolve from this point onwards, right? I think there's space there, and there's a lot of potential there. So we really are keeping an eye on that one. AI, it's a different story, right? AI is, in my mind, not a wave that is going to raise all boats or sink all boats. Okay. I think there's going to be winners and losers in AI, right? So we are at a very early stage.
Okay.
some of the reactions where we are seeing where it's almost like a win-all situation in some parts of the world, and India is kind of seen as a lose-all situation. I don't think that's going to play out that way, right? I think corporates are going to adjust. There's going to be some losers that come up in other parts of the world, and there's going to be some winners that are going to emerge from India from the story, right? But it's very early days. It's going to take a few more years to play out.
Okay, but you don't think that India has been lagging behind, or that we've been sort of just sleeping on this big opportunity or this big wave? That's not your view.
No, I don't think it's sleeping behind. I think structurally there have been some challenges where, in terms of just the initial kind of wave of kind of the development of the models, etc., that's happened in other parts of the world, right? And then the I would say the infrastructure behind it, that's happened in other parts of the world to start with. Okay, correct. So maybe that's what's led us to the situation where we are now. But that's not something that is going to stay that way for a long time, because the models are going to change, the usages are going to change, companies are going to adapt, and we can see some of that happening already. So that's why I think on a go-forward basis, I think we are going to be ultimately benefiting from how we adapt to AI, and some corporates are going to come out really, really good out of this.
And you do stress a lot about investor need, and that is something that you're actively looking to address. So, if for a moment we could touch upon, you spoke of those potential traps that investors, after they start off their investing, they can get misguided to a certain point. Can you tell us, over your experience, maybe if you had to put on the hat of maybe someone in education or just educating investors, what those potential traps are, and what are the questions they really need to ask themselves when they are looking to invest long term?
Yeah, I can use my own example, right? First is get started early. That's one mistake I made. And this is me working in finance.
I know. Who would have thought?
I'll tell you why. Like, I'm a fund manager, and I didn't properly start investing till maybe 3-4 years in. Because you kind of, you get into this rut. You're like, okay, I need to save first. I need to build up a little cash pile. Maybe I need a mortgage for my first house. Like, you get into that mindset, because I think that's kind of how previous generations have thought. So I kind of grew up with that mindset. So waited for like 3 years, built up a cash pile. It was just sitting in cash for a while. And then I started, investing. I think that's wrong, right? Okay. And that's my biggest regret, that I didn't start earlier. So
what age did you start, roughly?
So I would have been like 24, 25. I could have started, I started earning when I was 21. So I should have started then, really, right? So that's one piece. Then once you start investing, so get started early, then it's about discipline. I think that's the other thing, where I think you can have a trader mindset, which is great, but realistically, unless you're doing that as a professional, it's probably not going to work out. But if you want to have a trader mindset, that's great. But do an asset allocation. Maybe leave a little pocket to say, hey, if I have 100, I'm going to have 10 that I trade in and out, and the rest 90 I'm going to invest. And in that investment pocket, it needs to be disciplined. It needs to be reflective of where you are in your life, what your goals are, what are you actually looking to achieve. So
even charting out your goals at the get-go is important.
Is important. And they don't have to be, they can be a mix of short, medium, long as well. It can be, okay, I want to go on a 3-month holiday and I need some money for that. That's a short-term goal that people might want to have. And you want to have that in very, very safe liquid assets, because you need that money. You might have a medium-term goal about buying a car or a house or whatever. And then you got long-term, for my kids, all of that. So create different piles of pockets, and each of those. And that's why I think goals are important. And combining that with your risk tolerance is also important, right? And I know there's a lot of risk profiling kind of tools out there, but let's be clear, risk profiling isn't about what you fill out on a form, okay? It's about how you actually feel when markets go against you, right? So if you have a 10, 15% drawdown and you can't sleep at night, don't have 100% of your portfolio in equities. Simple, right? So think about that when you're thinking about your goals.
You have hit the nail on the head. I feel I've interviewed so many people and we talk about risk profiling and things like that, but that is just a classic example, right, of how you sleep at night.
It's a feeling.
Correct.
It's a feeling.
It's a feeling.
Right?
Yeah.
It's a feeling. So really people need to think about that. I think that's a trap. You might say, oh, I filled out this questionnaire and it says I'm aggressive.
Yeah.
But then 10% down and I can't sleep. So think about that. Think about the horizons of your goals.
Yes.
Those are, I would say, the typical traps people fall into. I've fallen into.
Yes.
And I think discipline is what compounds, right?
Yeah.
Smartness doesn't actually compound, to be honest. Like you could be really smart and get one trade right, and then that goes against you, right? And one of my colleagues I was chatting with yesterday said this to me. He said, "Hey, you know what? Every once in a while, the market's going to punch you in the face.
Yeah.
So you got to be ready for that."
You're absolutely right. It's not going to be one way. You're going to get knocked in the face sometimes for sure. And then you've stressed upon the importance of asset allocation. And I think that's where it's equities, fixed income, global exposure. People are sort of all over the place. How important is it to know to do the right asset allocation?
Yeah, it's very important. Now, you could give yourself a little bit of a leeway if you're just getting started, right?
Yeah.
If you're just sitting in cash, I wouldn't try to over-engineer, oh my God, what's my asset allocation? The first step is, I want to get invested. Just get into that discipline, start the SIP. I think that's the first step. But then, I think very soon after that, you think about the goals. You think about what is it that is going to give me the right mix and it doesn't have to be too many things. Like that's the other important thing. I think people think asset allocation is like this giant portfolio with like rows and rows and rows of funds and stocks and equity. Like you could get a very good asset allocation with 6 or 7 funds, to be honest, right?
Yeah.
So equity, fixed income, commodities, some of these like buffer kind of products. So that's where it gets interesting. But if you're at the very, very start, you can go very simple. You could go equity, fixed income, commodity. Like 3 things, you could start with that. Once you start developing your overall portfolio, then you can start and you have a better understanding of kind of your own risk profile, markets. You can start thinking a bit more about, okay, within equities, what's my core, right? And what's my satellite? You can start getting nuanced there. You can say, you know what? I just want a large cap exposure. I'm just going to get that with an index fund. And a lot of people are starting to do that, right? Globally, that's becoming more and more of a phenomenon where some of these core exposures are just being expressed through index. So in the US, over 50% of mutual funds are now passive, right? And then you can say, okay, on top of that, where do I want to generate? It could be in market caps. It could be in sectors. It could be in themes. You can start getting very, very nuanced around this, but depending on where you are in the investor journey, I mean, keeping it simple generally works. Keeping it consistent is way, way, way more rewarding than complicating things.
So given that you've had so much global exposure as well, what does India have going for it and where is it that we're lacking according to you?
A lot of things going for it in my mind. I think firstly, the digital, sure, 100%, right? But the demographics, all the macro things that we talk about, where the percentage of the working age population, productivity is still on the up in most cases. Let's ignore short-term blips, but broadly speaking, growth, inflation are all in the right mix. That's important. Maybe not so much in the last 6 months, but longer term trends, I think that's still a very positive. So when you look at all these macro trends, I think these are all very, very, very positive for the country on a 3 to 5 year horizon, right? I think where we can do more is definitely on the education piece, getting the word out there to the deep regions of the country is where I think the biggest challenge lies. Because
penetration,
right? Because it's much easier in a I would say a smaller, less diverse country than it is in India. So I think that's a big challenge. So the potential is there, but we need to do a lot of work. Like I said, in the combination of digital and physical, and localizing, regionalizing the message, customizing it to the end customer is going to be important. And I think that's also where AI can help, bringing it back to that other theme that we've talked about, where you are now getting to a place where customizing a message can become very easy in different languages. So you can create like a video about an education piece, the importance of SIPs, and you can get AI to churn that out in 20 languages at the same quality. And that's the important thing. It's not
putting
about
my job at threat. I get it. I get it.
But you can get that, and you can customize. What I want to be able to do, to be honest, is language is one thing, but you can personalize it to the extent that if someone is on their phone, on the app, looking at financial news or trying to learn about something, a new fund or a new kind of investment option, even things like the way that is explained, the anecdotes, AI should be able to just very easily customize that. So if someone's, let's say, a big cricket fan, like it's like equating the fun to like cricket. It makes them understand faster. And then someone else is, I don't know, into fashion or football or whatever, right? Like we could not do that at scale without AI.
No, right? Absolutely. And just that penetration and reaching, I guess, is as of now a bit of a pain point, but which is being worked on very close.
But we're there.
Very being worked on. There's a lot of myths when it comes to maybe global investing.
The myths of global investing. So one is that it's a big miss. Firstly, right, is that, oh my God. And I think that is more driven by the recent performance, right? And this is to me, I am concerned about this, right? Because it's the wrong reason to think about global investing. People should not be thinking about global investing because like Taiwan and Korea have done amazingly well for the last year and India hasn't. Like that's returns chasing, right? Because that will turn and then people will be on the wrong side of it. So that's a myth that I want to bust, is that there's this like almost like FOMO thing happening about other countries, about AI, semiconductors, etc. The way to think about global investing is, again, in the asset allocation context, as a diversifier. And I think that's the right framework to say, hey, I'm in India. I have exposure to Indian economy because my income is coming from a company that I work for here. And I'm also exposed to the economy because all my investments are in India. So maybe I want to diversify and have exposures to other countries. So I think that's the framing that people need to have rather than saying, oh my God, I missed out by not investing. So I think that's the biggest myth. Some of it, the other part is, I think a myth and a reality is like it's hard to do. It is harder to do. It's not as straightforward as what we've just talked about, which is, okay, you open up an app and you invest in a mutual fund in 3 clicks. Yes, that is harder than domestic, but it's not impossible. It can still be done. And I think a lot of players, including us, are working towards making that easier. So we're trying to see how can we make that digital journey as easy as possible.
And like you said, diversification should be the thought process for an investor. Now, SIFs is another big category that you're looking at, and that sort of sits at the intersection between PMS and AIFs and mutual funds in terms of the flexibility, in terms of ticket size. Can you tell us a little bit more about, for someone maybe who doesn't know enough about SIFs, why this is a category to look at?
Yeah, I think you summarized it really well. It kind of sits in that sweet spot between PMS, AIF, and the mutual funds, right? And there's another kicker that you add to it, is that it's a lower ticket size. So it's giving you access to differentiated return stream that you would normally experience in a PMS or an AIF at a much lower price point. So PMS is at 50 lakhs, AIF is at 1 crore. You can get in here at 10 lakhs. So that's one big difference. The second one is the fact that it's in a mutual fund wrapper. That's very important, right? Because you get a lot of the benefits of the governance, the transparency that goes. People know, people interact with mutual funds, so it's still a mutual fund. And for some of the categories, such as the hybrid one that we're launching, you are still able to construct and get access to these and benefit from equity taxation. So if you hold it for over a year, so that's another big advantage over the PMSs and APEs. I'm very, very happy that we have actually come up with a category and we're launching in this space because it is addressing that missing middle point.
Yeah, I like that you put it that you are getting access to that differentiated return stream at a lower ticketing a price and the fact that it has a mutual fund wrapper. Now, Aladdin, can you just tell us a little bit more? Have I pronounced it correctly?
Yeah, sure.
Okay. Okay. So how is it helping with index funds? Can you tell us a little bit more about it?
Yeah. So let me try and simplify it because I don't want to bore people here on the technicalities of it. So it's an end-to-end investment platform. Okay, so we use it. So all of our teams, whether it's investments, risk, operations, compliance, everyone uses it. So it kind of ensures that the entire, let's say, operational working of the AMC is happening in this one cohesive platform. And so everyone's looking at the same data. So all of that massively allows us to simplify, minimize the operational risk and scale, right? So that's from a manufacturer perspective. Internally, we call Aladdin the language of portfolio. So everyone's speaking the same language. So if it's a investments person or a dealer or a risk person, they're all talking the same thing. So that's great for us, okay? So it allows us to innovate and scale. How does it benefit investors? So that's I think the more relevant question, right? So when we are able to innovate and scale, we are able to produce differentiated strategies. And the scale component is that we are able to manufacture those at a more competitive price point. So we're reducing the cost of generating these new innovative strategies. And we're passing some of those costs to benefits to our investors as well. Then is also what we're also looking to do is how do we provide more and more of that, let's call it deep analytical access to our investor base as well. Now, we have to be careful here, right? Because we don't want to overcomplicate. Like I said at the start, keeping it simple, keeping it consistent is the most important thing. But for, let's say, more nuanced investors, they would appreciate and benefit some of the additional analytics, the stress testing that features that Aladdin has at a click of a button, all of that. So we're starting some of that mainly with our institutional corporate clients. So we're starting to kind of give them access to some of these advanced reporting features. And we will start to roll that out as well across the rest of the investor base. Okay. We're not going to rush it too much because it can overwhelm let's say, the common investors. But over the next sort of few years, we'll try and do more and more of it for the investors.
What about ETFs? Because they're clearly a long-term play. And globally, we have seen how well they have been adopted. Retail investors in India as well are showing a lot more interest now. Is this the way to go as a category?
Yes, we believe over the longer term, ETFs have a very, very important role to play in the Indian investing ecosystem. You made the global example, right? So globally, the ETF wrapper has already been recognized and adapted as the wrapper of choice, I'll be honest, right? Especially in the US, and it's starting to happen in Europe as well. And you're seeing ETFs now go beyond just passive, and you're seeing active ETFs. And actually, if you look at the flows, most of the flows are actually going into active ETFs in the US right now. And there's a specific use case in the US because from a taxation standpoint, the ETF wrapper just becomes a lot more advantageous. And that's why you're seeing this like huge move happening. In India, it's not as strong as that because the tax arbitrage doesn't quite exist. But I think still in terms of kind of the liquidity part of it, the ability to go in and out in a very efficient manner is something that investors will appreciate. Now, it's going to take some work. So we are committed to doing that work. So we are also going to be launching ETFs. We haven't yet, but very soon we will be.
Okay.
We need to launch and work with the ecosystem on making that better. Because if you look at ETFs right now, it's still primarily an institutional vehicle.
Yes.
It's mainly done by institutions. And retail is starting to participate, but not in big size. And also, not in the full spectrum of ETFs, right? And there's a very good reason for that, and it's the liquidity, because a retail investor is going to go trade it on the exchange. Now, for the top 5, 6, 7 tickers, your big Nifty tickers or your gold ETFs, it's pretty competitive.
Yeah.
It's pretty tight. You can go and trade it. You can go in, out, great. Anything beyond that, the bid offers start going really wide. It's like 20, 30, 40 basis points. Then if you're a retail investor that wants to go in and out, why would you do that?
Yeah.
And you're going to pay up a significant amount of your returns just going in and out of the fund. You're better off just buying the mutual fund and getting the NAV at the end of the day. So I think that's the piece that we need to work on. That involves how do you grow the overall market maker ecosystem here? How do you incentivize the market makers? And how do you create that additional liquidity on exchange so that retail can then start participating? How do you create more innovative exposures? How do you provide that? So it's going to take time, but we are committed. Like as you said, BlackRock is a big player in ETF. So we have a lot of learnings that we're bringing from our global experience to Jio BlackRock here.
Yeah.
So we're going to be working very hard on that.
Working with the ecosystem, like you said.
Exactly.
Just generally when there's, concerns about foreign institutional inflows, you have gone on record to say these are tactical, these are cyclical, one shouldn't worry, but the tendency is definitely to hit the panic button. What would you want to say on flows?
Yeah, so I have worn the other hat, right? So I've been a global asset allocator in my previous role. So I wouldn't call it hitting the panic button, but think about it from their lens for a second, okay? I say they now because I'm here and I'm one of us. From their lens is that those asset allocators, they are relative value players, right? So it's not necessarily about panic. It's also about where do you see value in other parts of the world. So for example, China saw a lot of that coming back because valuations were good and you could see growth coming back to a certain extent. So some of that rotation went there. Then you have obviously the AI beneficiaries in other countries. So the rotations are happening because people are seeing relative value in other countries versus India, right? And the thing with relative values, it's all relative. It can change.
Yeah.
Right. So, and that's why this behavior comes about. Now, the benefit that I think we've had as a domestic industry is that the domestic flows have been so strong, especially the SIPs, and we all know the story now. The SIPs didn't really stop. People continued to invest with discipline in the markets, even when the FIIs were pulling out. I think that's a really strong sign, also from the FII perspective, because if you see as an international investor, you see that domestic market being really robust, sticking to the discipline of investing. Then when the valuations kind of kick back in, then you kind of come back in. So I think that's going to encourage. Yes, it's been, it feels like a more long drawn out story, right? Because you thought about the last 18 months or so, you had the initial valuation concerns. That was the September 24 piece. Then you had the tariff story.
One after the other.
Then you had the war. So there's been a lot. Then you had AI in the middle. So there's been a lot of things that have led to this, but they're all kind of tapering off now. I think that's for me that's the positive sign. I'm coming across very optimistic on everything here, but I truly believe those are tapering off. The rupee is now at a more attractive point for international investors as well, to a certain extent. So I think they will come back, right? Okay. And I see that as a rotation. And that's when you're part of global markets, you have to accept that.
Yeah,
that you're going to be exposed to that rotation.
And not have sleepless nights. Yeah.
Correct.
Okay. BlackRock manages over $10 trillion globally. What is the one thing from the global playbook that you are bringing to India in particular?
I think the number is 14 trillion now.
Okay,
so
then let me ask that again.
It moves up and down a lot. But
okay, can I just... Okay. So BlackRock manages around $14 trillion globally. Can you just tell us a little bit more about what is the one thing that you're bringing from the global playbook to India?
We've already started enacting on this piece, which is when we think about the future of investing. So where are we going to go to from here? Right? And I think more and more of investing is going to become a lot more data-driven and systematic. We have the ability now to analyze huge amounts of data sets. And when I say data sets, these are more traditional data sets, like your financial statements, etc., but also all these alternative data sets that I talked about, the credit card swipes and all these kind of things. There's data available, and there's now the ability to analyze and process it with the help of machine learning, AI, etc., right? So that is going to be, I think, a bigger driver of how people are starting to think about investing and how people are actually looking to generate alpha. BlackRock has been doing this for many, many years through the systematic active equity franchise, and that's why we brought that here first. So when we think about the global playbook, for us, that was the number one thing, and we've seen that play out. You know, the AUM of just that franchise at BlackRock is over $400 billion, right? And it's, for a market like India, it's very, very, I would say, complementary to how the market's evolving. If you think about what's happening here in India, there's growth. There's also depth that's increasing. That's important. There's more and more companies that are coming to markets, more and more IPOs happening. These companies are getting bigger, and the depth of trading in these companies is increasing. So liquidity is better. That kind of environment is perfectly suited for a data-driven systematic strategy, because then you have more companies to look at. You're not sitting here with a team of 10 analysts that go, you know what, my brain's fried. I can only look at 20 companies right now.
Yeah.
You actually have a machine saying, hey, you know what, I'll give you insights on 500. And then you pick and choose. And then you can run AI on that to even trim that how much ever you want. So that's what we're bringing, because we have this view that this is where investing is going to go. And we want to be ahead of that curve.
More data-driven and more systematic. It's good to know. And, you know, you have this broad international perspective. You've seen the mutual fund industry globally. I want to understand from you, how does India compare with some of the other emerging markets who are at the same stage when it comes to mutual fund penetration?
The emerging market landscape is very diverse. So we are, maybe behind some of them, like the Koreas of the world, but we are ahead of a majority. I think the most important thing, and I talked a little bit about this earlier, is that the breadth is amazing here right now. So the variety of corporates that are coming to market, the industries that they're coming from, so the startup ecosystem here, and then from startup to actually going IPO, that's very impressive, right? And there's not this huge concentration risk, right? Where you're seeing other markets where the entire market is one stock. You know which one I'm talking about, right? And that risk doesn't really exist here. Yes, there's still, the bank's a big part of the index, et cetera, but the breadth is still very high, much higher than even China. If you actually look at the sectoral breakdown on a percentage by percentage basis in India, it's actually much more diversified than even China. So that's very exciting when you look at it relative to other emerging markets.
And finally, time has certainly flown. You've already been here 2 years, 2.5. What is the 5-year vision for Jio BlackRock?
So in 5 years, we want to be able to grow the investments ecosystem here in India. And that's multiple. There's multiple layers to this, right? So first is the investors themselves. We want more and more people in India to be investing in mutual funds, to be invested in the market. So growing just the number of investors is one. Then addressing the needs of those investors, right? And this, which is there's different needs for ones that are just coming to the markets, to ones that have been here for 5 years, to ones that have been here for 10 years. So having kind of the solutions that cater to those kind of different segments and different stages of the investing population is going to be very critical to us. And then broader ecosystem around things like, the ETFs, market making, regulations, and how could we set up, we're at 6 crore investors, like how do we get to 50 crores? That was a challenge that was thrown to us by SEBI actually in a recent forum. So that's the mindset that we are here with when we think about numbers for the next 3-5 years.
Okay, let's get into a quick rapid fire, Sid, before we let you go. Okay, ready?
I'll brace myself.
What's one word an investor or one thought process an investor should never use to pick a fund?
Returns.
Okay. One BlackRock global practice that you wish India adopted faster?
Risk management.
Okay. The most...
Am I supposed to give one-word answers? As soon as it's rapid fire, I just go.
You're getting your hamper. The most underrated fund, according to you, in your current lineup?
I think the most underrated one is the core one, which is the FlexiCap fund.
India in one word, 10 years from now.
Massive growth.
Okay. One job in asset management that AI will never replace.
Can I say CEO?
Of course you can. Okay. Global investing, the biggest myth that you want to dispel.
Diversification, not returns chasing.
Okay. Jio BlackRock in the next 10 years, do you have a word?
Can I say massive again?
Of course. I mean, if that's what it's going to be.
No, it's look, massive is the word we want to use, but it's not about that, I'll be honest. And I want to take some time because this is important, right? Jio BlackRock is about growing the overall ecosystem, bringing more people, providing more access to more and more people to investment solutions. That's what it is about. So sorry to digress from the fun component, but this is important.
No, but growing the overall investor ecosystem, which you've stressed upon. What is the one message that you want to give to Indian investors who are still on the fence about putting their money in mutual funds?
Just do it. Nike.
With a Nike tick. Okay. Do you have
Just do it. Stay disciplined through SIPs.
Yeah.
So more than one message, but it's important.
Absolutely. And do you have any regrets when it comes to your personal finances? That you
Started too late and wasn't consistent enough at the beginning. I am now, thank God. I've been investing for a while, but that would be it. Started too late.
Okay. If not running an AMC, what would you be doing?
Running an IPL team.
Yeah, I know. I read that. Really?
Yeah.
So it's because cricket?
Cricket, I'm a big fan. I know I wouldn't be able to play in one.
Yeah.
So the closest thing I could do is probably run a team.
Okay. And London or Mumbai, what feels more like home now?
Mumbai, 100%.
Okay, great. Thank you so very much for taking time out and speaking to us. It's really been valuable.
Great. Thank you for having me. Really enjoyed it.
So there you have it. Those are some interesting takeaways talking about the overall Jio BlackRock relationship and the amalgamation, the fact that you've got the BlackRock global investing mindset and thinking and the deep local knowledge and penetration with Jio. Manufacturing, AI, those are some of the themes that are looking quite encouraging. And the goal for Jio BlackRock is to grow the overall investor ecosystem. In terms of personal finance and investing, one should definitely start somewhere, but start at an early stage. Have discipline, have your goals in place, do your risk profiling, and of course, do remember that discipline is what is going to take you a long way. Asset allocation, keep it simple. Keep it consistent. Overall education in India is important. We have a lot going for us. The demographics, the productivity, the overall macros as well are in our favor. And investing, the future is going to be more data-driven and more systematic. India also has the fact that we don't have the concentration risk that's really going for us. Look to invest globally. They are making the landscape much easier, but don't do it for FOMO. Do it for diversification. I certainly hope you enjoyed this episode. Do remember to like, share, comment, and hit that subscribe button. Thanks for watching.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.